Hello everyone. I'm going to do a weekly recap between November 9th and to November 13th this week of how the market shape up. Investors are moving away from the stock that benefit from the pandemic and back toward those associated with the economic recovery today. And many high-tech stocks will rebound. On Monday, the Dow and S&P 500 soared to a new high-time highs on massive volume. Dow were up 1,000 points and went down 341 points, but offset by gains of 400 points, ending 29,480. And you can see the very beginning of the week, it was pretty much up a very high volume. Then it did get a drop, and it was going up again. So, and the Nasdaq with shift sectors, Nasdaq was down, but recovered the loss later of a week. So Nasdaq had been going down the first couple of days when Dow were up, but then later of the week, kind of people were buying back the stock, and so so the high tech stock were kind of rebounding. The Dow Jones Industrial Average is up almost 4% this week after a move more than 800 points gain on Monday, and Nasdaq was down 0.5% for a week. Amazon stock slipped 5.5%, but it's only slightly below its 10-week high. Sophie and Zscaler stock both skipped 12%. Zoom dropped over 17% on Monday and then fell more than 7% Tuesday and rebound later of the week, though it's still up more than 400+% so far this year. As I have said before, valuation of upside risk versus potential downside risk is very important. So in this case, Zoom, I have been always, if you watch my video, I have not suggested people to buy Zoom, and I think it's overvalued. So the market have dropped because also the vaccine news. Despite the vaccine may not be available 6 months or 9 months later from today, I mean the investors actually have reacted to that and kind of questioning whether Zoom will still exist, right? If the situation back to normal. United Airlines climbed up 27% the peak of Monday's value, and competitor airlines rose as well, while Royal Caribbean Group RCL, Carnival Corporation CCL, and Norwegian Cruise Line Holding SCLH, so those three cruise lines all increased more than 30%, but came down back a little bit later of a week. Shell last month singled out the Pulupokon manufacturing complex in Singapore as one of 6 key refining and chemical hubs that will remain core to its business. However, it was announced Tuesday that the capacity will cut into half and hundreds of jobs will be eliminated. The plan is to reduce staff to about 800 by the end of 2023 from 1,300 now. Shell is committed to eliminate all net emissions from its own operations and the bulk of greenhouse gases from fuel it sells to customers by 2050. Given that Europe will transform to cleaner and greener energy in the future. And also, Shell stock, if you have followed that, it actually have rebounded significantly after the announcement of reissuing dividend. And then with the news of cutting jobs, the Shell actually have been back up from $23 to now over $30. So, but again, if you look back the stock, it was at $82 at one time, which is very, very high, to really slipping down to as low as $22. So, it's very hard you have to look at the valuation of energy very carefully, with Biden probably going to be president, how they are going to be impacted. But I think in terms of the roadmap, a lot of these energy companies will be more cautious to do green energy than fossil energy. So, that you have to watch for the oil stock carefully to shift the portfolio, which one is going to move to that direction, and those will be good invest. I mean, despite the energy stock actually did rebound quite a bit over the last couple of weeks. The initial unemployment claims fell by the most in 5 weeks, signaling the gradual recovery in the labor market amid the COVID-19 pandemic is continuing. Well, like I said, I'm not sure this job why is exciting news. Is it really people just leave and gave up looking for a job because of pandemic, things were bad? I knew that, during my journey of looking for jobs, I still had difficulty finding one. and the pay cut is you pretty much look at a job is 25% to 50% pay cut, and also have 3 interviews that have to go through in order to get the placement. So a lot of people may have an interview right now, wasn't sure going to get a job or not, but maybe 2 weeks later they realized they didn't get to the last round or they didn't get a final offer. So there's a lot of very fierce competition out there, and unfortunately, a lot of companies still continue without the support of the stimulus. They actually have to let go more employees. So things, to my view, I'm just trying to give you a mixed picture of it. Is while the number looks good, and Powell also said that he's still very supportive of the stimulus on last week FOCM meeting. That were really telling you that things may not be sounding as quick as what you heard from the news, and you guys know that. Sometimes the news doesn't really tell you everything, but only what they want you to hear. So it's very very important to really kind of listen to both sides and using your own judgment to determine what makes sense to you. Regardless, it's really good news that actually coming off the market. The election is over. Unemployment rate going down. The manufacturing, index is good. Consumer price index is higher than expected. But then a lot of time also you got to be aware of that. The estimate already actually been adjusted early of the year after the pandemic, and things were already lower. So beating the expectation sometimes, while we're cheering for that and trying to figure out why the stock not going up, that's the reason, because it's already lowered the expectation, being revised lower. So even hitting the expectation is more like just something that companies should have been delivered. Chinese e-commerce giant JD.com kicks off earnings Monday morning, which is tomorrow morning. Analysts expect JD.com earnings per share to jump 41% to 41 cents a share. Revenue is seeing swelling 36% to 25.6 billion, the second straight quarter of accelerating growth. But regardless, this stock, if you have followed it, if you have bought it about a month and a half ago, which is 6 weeks ago, the stock is only around 70-ish. So even a month ago, you'll be around 80. If you would have bought that and the stock latest was $92 on Friday, you will have gained 12% return already with my recommendations. And Initiative, Surgical, ISRG, MASI, ABT, CDNA, and NARI are at or nearby point of range this stock market rally. So this is coming from the IBT, one of the rating company agency that recommended these stocks. So feel free to check it out and make your decision if it's good to buy. And I think ABT would be a good one. The other one, honestly, I never heard the name of it myself. So fair to say the past 2 weeks of market action have been hard to predict because, again, if you hear my video, people were predicting the market will be very sluggish, have a correction 15 to 20% with the elections. Then for some reasons, actually instead it going back the other way around, flipping it. It was rally, and then with the Pfizer announcing the possible vaccine with 90% effective rate. So but then there's still a lot of uncertainty, and also the continuous record high of COVID cases. You really get a question of a shutdown of cities. There will be still some uncertainties of what it's going to look like for the rest of this month. So, and there's still some company announcing earning meanwhile. So I really think that this is very mixed and very interesting to watch. But regardless, if you would have been looking at the right company to invest, like the one XPDV, I have been telling friends and people watch a video to buy that, 3 months ago already. If you had bought that, you would have profit a double because the stock was hitting $50 high as Friday yesterday, but you flip it back to $40 because you just have been gone up so much, like really crazy in the last week, up for the green energy electric vehicle stock. Like NIO was up as well. NIO was also NIO and LI also up a lot. The other piece is BIGC. I think is in my recommendation list. This is a good to buy. The stock had dropped it to around $68, which is original was saying within the range around 70-ish. It will be a good buy. I think because the stock have to issue another additional 1 million shares at $68, so the market was now at that range is totally understandable and reasonable. And then there's another one, BLNK, which is something can look for, but right now it's around 950. Their earnings actually were pretty good. They have make a very good progress quarter to quarter comparison and much better than prior year. Yet the market actually penalized them by 8%. But I still think the stock was a little bit higher right now. So if you hit around 850, I think then you're good to go to buy that one. And next year, when Biden determined to really creating the battery infrastructure for wind energy and recharging stations, this stock will be a rock. If you like my video, please make sure you subscribe and follow me. Have a nice and wonderful weekend.